Hey everyone, welcome back to the channel. Today we're going to talk about something that can be a bit confusing but super important if you ever find yourself in a tight financial spot: title loans. Time code 00001000 to 00001300. Title loans, what you need to know. Whether you've heard of title loans before or not, they can be a quick solution when you're in need of cash. But like any financial option, they come with their pros and cons. Let's break it down. So first things first, what exactly is a title loan? A title loan is a type of secured loan where you use your car as collateral. Basically, you hand over the title of your vehicle to the lender, and in return, they lend you a certain amount of money. The loan amount is usually based on the value of your car. If you have a car and own it outright, meaning you're not making monthly payments on it, you could qualify for one of these loans. Here's how it typically works. You bring your car title to the lender, they assess the vehicle's value, and they offer you a loan, usually for a percentage of that value, often around 25 to 50%. You'll sign an agreement, and boom, you walk away with cash. Now the catch is that if you don't repay the loan as agreed, the lender has the right to repossess your car. Alright, let's take a look at the pros of title loans. There are definitely some benefits, especially if you need money fast. 1. Quick access to cash. Title loans are usually processed very quickly, sometimes in as little as 30 minutes. If you're facing an emergency, this can be a lifesaver. Number 2, no credit check. Unlike traditional loans, title loans don't usually require a credit check. This means they can be an option for people with poor or no credit. And number 3, you get to keep your car. You can still drive your car while repaying the loan. Just remember, if you don't repay on time, they could take it back. But, and this is important, there are some major cons you need to consider before jumping into a title loan. High interest rates. Title loans typically come with very high interest rates, sometimes as high as 300% APR or more. That means you could end up paying way more than you borrowed. Risk of losing your car. As we mentioned, if you can't repay the loan, the lender can take your car away. Short repayment terms. Many title loans require repayment within a few weeks or months, which can be tough if you're already in a tight spot. So before you rush into a title loan, consider your other options. Sometimes there are better, safer ways to borrow money. 1. Personal loans. Some banks or credit unions offer personal loans with much lower interest rates and more flexible terms. 2. Credit cards. If you have a credit card with a low interest rate, that might be a better option. Seek financial counseling. If you're struggling financially, a financial advisor can help you work out a plan to avoid high-interest loans like these. So, title loans can be tempting when you're in a financial bind, but they come with a lot of risks. Before you commit, make sure you fully understand the terms and explore other options that might be better for your financial health. Do your research before borrowing money. If you found this video helpful, make sure to give it a thumbs up and subscribe for more money tips. Have you ever used a title loan? Let us know your experience in the comments below. See you next time.